morning everybody, and welcome back to Mindfully Trading, where I share educational videos about trading the Forex market as well as an insight into my journey as a trader. And as I'm recording this today, it is Monday the 19th of June 2023, and I'm going to go over my weekly outlook for the weeks, focusing specifically on the pound-dollar currency pair and trading the Forex markets. So I hope you guys are doing well. I hope you had a good weekend. I've managed to find myself some spare time. I've just put Sam down for his nap. We've had a super busy morning making breakfast muffins. That is the paradox of my life. I'm going from being mum making breakfast muffins to analysing the financial markets. So let's get to it. So I'm going to just drag over my browser tab here on forexfactory.com. That is a brilliant website. It's a free resource, and I use that to just check out the fundamentals and any upcoming news and events for the week. So as I said, I focus on trading pound dollar. By all means, it's really good to do this no matter what pair you trade, and just to keep an eye on any high impact news that's due out that can affect the volatility and the volume in the market. So today, Monday the 19th of June, is actually Independence Day for you guys over in America. So it's a bank holiday. Most likely not going to trade today because it will probably affect the market. It'll probably be quite quiet and quite choppy or just ranging. We'll have a look at the charts in a moment. But what else is going on this week? There's not much on Tuesday. I've actually got this filtered, so I'm only looking at the high impact news, the red and the orange. So Tuesday, we've only got some news here on Australian dollar, which isn't relevant to my trading plan. So for me, the main news is going to start from a Wednesday. So I've got some CPI news release coming up on the pound. That is changing the price of goods and services. That might make a little bit of movement for pound dollar. And then later on that day, at 3 o'clock in the afternoon GMT, we've got some high impact news for the US dollar. Moving on into Thursday, there's a little bit of dollar in the morning, but then there's some major pound news release at 12 o'clock. Official bank rates can be quite a impact on the markets. And then at 1:30, we've got unemployment claims for the dollar, which usually creates quite a nice bit of volume as well. So judging on how my technicals are looking, this can produce some nice volume in the markets that maybe I will capitalize later in the week on. And finally, on Friday, again, we've got a little bit of pound news in the morning, a lot of euro on Friday, some more pound news in the morning, and dollar has news at 2:45. So I do tend to be a little bit more conservative on a Friday, especially if I'm already up in profit, because I don't really see the point in pushing it most of the time. And for this, I'd have to wait until 2:45 before I think about a trade anyway, which is just quite late in the week for me. So I'll gauge that. So at a glance, looking at the news, it's probably going to be a bit of a slow start to the week for pound dollar. But let's have a look on the charts. Let's see how the weekly closed last week, how it's looking for this week, and get a weekly bias and break that down into a individual daily bias for the week. So if you guys have been following my journey, I basically have traded a lot of different strategies, and my current strategy that's going really well for me, it's giving me a high accuracy rate and it's working out great, is a day trading strategy. So I will do top-down analysis. I will start with the weekly time frame. I'll drop down into the daily. I'll have a little look at the 4-hourly, and then I execute my trades on the 5 minutes. Now, in this video today is just an outlook. It's just an analysis for the week to set me up ready so that each day in the week when I jump on the charts, pretty much know what I'm doing. I've just got to update it based on the current day. So I'm probably going to stick to the larger time frames in this video. I did create a video last week, which was a recap video for last week's performance. So if you've missed that, do check it out because I go over the results based on the previous weekly outlook, which was a good week for me. But here is the weekly time frame. Now, it might look a little bit messy up here. These black lines, these are institutional price levels that I like to have on charts because they just mark key areas where price is likely to react with. They're basically fixed around the whole or the half dollar. And then you can also see I've got this blue line. This is this weekly level here. We respected it here. Pullback, gained some strength. Last week was a crazy week for pound dollar. We had this amazing push up, very strong bullish. So I'm going to leave that in for now, just in case we get a pullback and a retest of that level, because it has been a significant level in the past. But last week was a major bullish week. Did manage to capitalize on that movement, which was lovely. But now we're in this new territory. If we look to the left, we are in this gapping area in price, which means that it's likely to want to fill this. So at a glance here, I'm going to be long biased this week, but we need to identify what we think price is going to do this week. But pretty much what I like to do from the weekly is just mark any key levels and see how it closed the last week. So let's drop to the daily, and I'm going to just draw a little range around last week's daily just to get an idea of the flow of price. Okay, so what phase of the market are we in? We're in a push phase. We've been pushing up. We had a little tiny minor pullback on Monday of last week, and then Tuesday, Wednesday, Thursday, Friday were all push candles, all pushing up higher. So from this, my immediate response is that I'm going to have two options for gauging my trades for the week. Now, overall, I am going to be long biased because the overall higher time frame trend is up. So the two options are I either look for push continuation trades, which are breaks of the previous daily highs or lows. And excuse my dog in the background. He's huffing and puffing because he's so bored of hearing about trading now. It's been years. So I'm just going to mark the previous daily high there and the previous daily low here. Now, I'd be very surprised if we actually break these levels today because it is a bank holiday. The chances are that today's candles probably going to range in between these levels. But that's okay because it means that tomorrow we might get an interesting break and an opportunity for a trade. So I'm going to leave those levels in today. That's one trade option using the daily time frame. And the other one that I like to do is to mark out where price is likely to pull back to on the daily, because it might be that we've had this amazing push up last week, that this week we might get a bit of a choppy week on the daily. It might need to just pull back a bit. From eyesight here, I mean, we've got an interesting point here, an interesting point here. This might be a level that price will pull back to like a magnet because there'll probably be some orders sitting there waiting to be filled. I'm going to just remove this blue box for now because that was an old fair value gap. I don't really think that will come into it now. So let's just take that out. And I will just remove that range as well. But basic market structure, if you are looking at this, you will probably agree that we've pushed up past this previous higher high. I've made a new high. We've pulled back. We made a new higher low, which was confirmed because price pushed up past the previous high here. So what I'm going to do using the daily and the Fibonacci retracement and the bodies of the candles is go from that previous higher low, and I'm going to just draw that right up to the current high on the daily. Now this will produce these three levels, which are called optimum trade entry levels, these percentages, the 62%, 70 and 79. Now instead of leaving my fib on, which gets a bit confusing with the institutional price levels, I'm going to just mark those three levels and make that a little box here on my charts. And I'm simply just going to have that sitting there because if we do see this big drop in price this week, it may come to these levels here, and it may even continue down to this fib. So I like to have all these potential options on my charts because then I can just wait and see what price reacts to, rather than trying to just push a trade and get in before price is kind of finished doing its reaction. But I mean, this pullback that we had here on the daily, this started consolidating on the 8th of May and we came back the 26th of May. So that's like the most of May that it consolidated down here before it pushed up. Now we are in the strong push phase, so I'm not immediately expecting it to just start pulling back. It will probably take its time if it does, as these things do on the daily, and by all means that in itself created some little scalp options during that pullback, but it's just good to have these levels marked. If price starts to break the daily lows, if we start to get some bearish close candles, then I may just start to scalp some short positions, aiming for a pullback down to these levels. So it's a few different trade plans that I've got going on for the week. And then obviously, as I said before, if it continues to push up, I will just try and trade breaks of the previous daily highs in combination with my current strategy, which looks for an adequate entry on the 5-minute time frame. Now, it's always good, especially when you're long biased and you're in a new area in price like this, to go to the left and see where the next potential level will be that price could be drawn to. It could be a resistance level. I don't usually like using those words because people get very tetchy about it here on YouTube, but it's a reaction level. That's what price does. It reacts to these levels. So let's just see if we can find some. What I'm immediately drawn to is we had a very nice consolidation along this level here on the daily. So let's just mark that as a daily key level. And then we got this explosive move down that continued coming down. And right at the top, the root, the start of that is a fair value gap. We're just looking at the 3 candles at the top. So if we say this is candle number 1, from the base of candlestick number 1, we've got candlestick number 2, which just drops straight down, and then candlestick number 3. The wicks of candlestick number 1 and candlestick number 3 never touched, which created this huge gap in the market. So I'm going to mark that. I do tend to like using orange for daily levels, just for me to know which time frame that is, because the daily tends to have a higher authority. So I know now that that is a daily fair value gap. I can pretty much remove that key level line because the fair value gap is representing that level as well. And you can see that at the moment, price has actually pushed right up to that level there. So once again, things that could happen. We could get some sort of consolidation this week. It might be a choppy week. The end of the week, we may start breaking into this level to see how price reacts. Alternatively, we could have a bit of a consolidation and price might break down and it might come down quite a bit. It might need to pull back to gain some more momentum to push up into this level. And it's just good to be prepared for anything in the markets. But for now, I think for immediate price action, that is what we're looking at for this week, are those levels I've just drawn. I could probably add in some more institutional price levels because, you know, we've been coming up this way. In fact, I will remove some just to tidy up the charts because until price is in that area, it doesn't really need to be so messy. But right now, we've gotten above 1.28. I mean, once again, you can see right there, the base of this fair value gap is an institutional price level at 1.2850. So it's just so interesting how all these things connect, how they work together. We've got an institutional price level, we've got a daily fair value gap. Will these be resistance and mean that price is going to pull back to another key level to gain some momentum to push up? Or will price push up into these and then that in itself shows a lot of strength and it might give a big continuation? We shall see. I'm going to add another institutional price level that's in the fair value gap. This is a very large gap. And I meant to say at the beginning of the video as well, I've been sharing quite a few videos recently. You'll probably have seen them if you follow my channel, talking about the Traders Day live event. It was actually on this weekend, just gone Saturday, and I was really gutted I couldn't make it, but I am getting to that heavy part of my pregnancy where I'm kind of struggling a little bit in a few ways. So trekking to London for me, it's a 3.5-hour train journey and a lot of walking. It just wasn't going to happen. But if you guys have been, because I was giving away some free tickets to subscribers, I know I've sent a few out. If you've been, do let us know in the comments below what it was like. You know, what were your key takeaways? Did you have a good time? It'd be really cool to get some feedback. But I'm just going to make a note on my kind of summary for the week analysis because I will wake up tomorrow and probably forget what I've done. But this is by all means my take on the markets. I'm not claiming to be a market wizard and to be absolutely correct. So don't just blindly go along now and say that I said it was going to go up. That's not what I'm saying. But this is just an insight into how I look at the markets and how I frame them. And I will use this every day and just update each day, update each daily's levels, the previous daily high, the previous daily low, and then look for a suitable entry. So my weekly bias is long, following on from last week's strength and this push up. I'll just hop on to 4-hourly time frame as well, just because it's a nice time frame. It's the bridge between the day trading and the higher time frames. So that's that previous point on the daily that we saw here that we used. It was the previous higher high. But since breaking that, you can see we actually had this little short-term one on the 4-hourly, which closed just above that one, which means that there is a chance that we could also use that as a point for the fib. For day trading. So if we go from the low of that little pullback and apply that to the high here, if price does break down below the previous daily low, and sort of pulls back a little bit at the start of this week, may find some strength in this area here, this optimum trade entry level on the 4-hourly time frame, which also is in confluence with a institutional price level, 1.27. Price does like to do that. It likes to come back to these levels. So that is another potential trading opportunity. I'm not going to just immediately get in short if it breaks this daily and close red. I'm going to just wait and see what price does, how it reacts to these levels. It might come down sort of today, tomorrow, Wednesday. We might get a pattern like this, and that could be a good place to get long. These are all potential scenarios. It's really good to have in your head, because when you see price doing something that matches a scenario you thought of, you've already got a foundation for a plan there. So you are just responding to what price has done. But I think that's it for me in this video. I do have resources below in the description to software that I've used. So this charting platform is TradingView, the broker I use, the prop firm that I use, the 5%ers, all of those bits. If you're interested, I'll have got links in the description below. Also in the process of bringing out an ebook, Forex Trading 101, a comprehensive guide for beginners. So if you are new to the Forex market, if you want a complete beginner's guide, if you want some help, I'm hoping to have that book come out soon. It's due to a lot of popular demand. So feel free to drop me an email and I can add you to the waiting list for that. Meanwhile, if you've enjoyed this video, please let me know by hitting the like button, and don't forget to subscribe to the channel below. Have a great week, and I'll catch you in my next video. Thanks for watching. Bye.